Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Albertsons, and let me tell you, it has a little bit of everything. A director saying see ya, a new face in the boardroom, and the same old behind the scenes deals. It's like a soap opera, but with more paperwork. We're looking at an 8K filing, which is basically a company's way of saying, hey SEC, something important happened and we need to tell you about it like right now. This report is dated February 21, 2025. The company we're talking about is Albertsons Companies, you know, the folks behind your local grocery store. The date that this report is about is also February 21, 2025. So whatever went down on that specific day. Here's the juicy bit. This section is all about changes at the top. We're talking about directors leaving, new ones being appointed, and sometimes even changes to how much these bigwigs get paid. So what happened on February 21? First, a director named Steven Feinberg resigned from the board of directors. He quit. The report makes sure to say that he didn't leave because he was fighting with anyone or because he disagreed with how the company was being run. Everything was good between everybody. Feinberg had been appointed to the board in October the previous year, meaning just a few months prior. He was put there by some companies connected to Cerberus Capital Management, which is a big investment firm. They had the right to pick someone for the board, thanks to an agreement they had with Albertsons. Now, who's the new guy? Frank Bruno. He was appointed to the board on the same day Feinberg left. Bruno's term will last until the next annual meeting, when the shareholders get to vote on who should be on the board. Interestingly, Bruno wasn't immediately put on any of the board's committees. These committees are like smaller groups within the board that focus on specific things, like finances or how much the executives get paid. Just like Feinberg, Bruno was picked by Cerberus, so Cerberus still has their guy on the board, just a different person. So who is Frank Bruno? He's the co-chief executive officer and a senior managing director at Cerberus Capital Management, that same investment firm that gets to pick board members. The report notes that Cerberus is registered with the SEC, which means they're following the rules for investment companies. Cerberus manages a whole lot of money, $65 billion. They invest in all sorts of things, from real estate to private companies. Bruno joined Cerberus way back in 1998. Here's where it gets interesting. Cerberus owns a huge chunk of Albertsons stock, over 151 million shares. This gives them a lot of say in how the company is run, which is why they get to pick people for the board. The company provides certain services, it did things for them, and these services are disclosed in the proxy statement. The proxy statement, filed with the SEC last year, gives us a lot of background and information on how Albertsons runs their business. The report refers to the proxy statement and incorporates its content by reference. This just means that that other statement has information that is relevant to this current report. The report also states that Bruno isn't involved in any deals with Albertsons that would need to be disclosed, other than what was already mentioned in the proxy statement. So no hidden arrangements or anything like that. So what does all of this mean? It looks like there's a pretty tight relationship between Albertsons and Cerberus. Cerberus has a big ownership stake in Albertsons, they get to appoint board members, and they even provide services to the company. Having an investment firm so closely involved can be a double-edged sword. On the one hand, it means Albertsons has access to Cerberus's expertise and resources. Cerberus has a lot of experience in different industries, and they can help Albertsons make smart decisions. On the other hand, it could mean that Albertsons' decisions are influenced by what's best for Cerberus, rather than what's best for Albertsons' customers or employees. Cerberus is, after all, an investment firm. There's also the risk that Cerberus might decide to sell its stake in Albertsons at some point, which could cause a lot of uncertainty for the company. Overall, Albertsons seems to be in a stable position, but it's definitely worth keeping an eye on how their relationship with Cerberus evolves. The constant board member change is concerning, but it could also be nothing. Thanks for watching. If you found this helpful, please subscribe for more corporate decoder content, like and comment.